Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be taking a look at utilizing fractal time frames for entries. And really it comes down to the mindset of locating larger time frame moves, whether it's a 15-minute chart, a 60-minute chart, and really trying to figure out, hey, where is the best spot to get into this trade, but with a smaller amount of risk, right? I don't want to risk 60-minute chart risk. I want to risk like 5-minute chart risk, right? But we still want to try to go for that 60-minute target. So how do we find our way into that type of scenario? And one of the best ways to do that is by utilizing fractal time frames and waiting for a very common situation that occurs with almost every reversal, which is a higher low, but more importantly, a reversal in volume. And we'll get into that when we start looking at some of the examples. So let's highlight a couple areas of interest where we can hone into. So let's say starting off at the bottom, we had a nice rotation off from the lows. At this point in time, we would have had absolutely no idea to be buyers down here. So I'm not going to look at that as a point of interest because I think that's highly unrealistic. But as we continue back up with another new high, we now have a picture perfect to the tick L4, this kind of salmon-y color line here, right back up to a new high. Generally speaking, when we have a reversal point off of an L4, the next area of interest is going to be the following L1. In this case, that would put that zone right there. So that's going to be the first area of interest that we want to look into on a faster time frame. So we'll set that to all charts. Might kick it off this time frame. That's fine. As we continue further forward, we have an L1. We pop up to another new high. No pullback, no pullback. Continuing to just go screaming away. And then the market finally begins to pull back. So initially, a lot of traders will have been looking for an L1. So let's be realistic. We can't cherry pick here. When the market's pulling back to the L1, was there an indication that there might have been a long that possibly got trapped out? Right? We got to look at it on both sides. We got to be fair. The same thing would go for the area down here. We've got to pay attention to that one as well. So let's kind of see. I'll mark those up just to see what they wanted to do. No, that's not what I want. Go away. Let's put that on all charts. There we go. Yes, that's fine. And as the market's working its way back down, which is where it is now, that'll give us some clues on the way lower in terms of zones of interest. Now, another point of interest is we're coming back to an L3, and usually we find something in terms of a stall or a bounce at an L3. That's the main primary confusion zone. So even right where we are now, we might be able to look at that faster time frame and see if anything lines up. So let's jump over to the faster time frame real quick into those areas and see if anything really stood out as is useful for possible reversals. All right, so we've got the 500 tick loaded up. Let's go backward a little ways here. Go back. There's that one there. Was that all of them? I think that was all of them. Yeah. Maybe. No, I'm not sure. Hang on. Okay, perfect. So the first zone of interest when the market's pulling back, was there any definitive area or type of thing that would set up, some type of pattern that would tell us, hey, you might want to start looking for a possible reversal here? Well, one thing very obviously stands out. If we're looking at the overall trend movement, from the very, very top, we have a pretty obvious 3-press top, but you could say that along the way, the whole way up. We can't really be that nitpicky. This does have a nice, very obvious wedge breakdown, had a breakout and a pullback, and this slide lower is intense. This would lead me to believe that this was possibly earlier shorts that maybe got stuck trying to find their way out. So my first inclination, let's go all the way back up to the top and see if there's a POC somewhere in there. Hey, what do you know? There's a POC somewhere inside there. You can't make this stuff up. Now, they did manage to go a little bit further down, which is the L1 on top of everything else. So remember, we have the L1 zone, which is lining up. When the market begins pointing into that area, just for the sake of an easy-to-follow pattern, were there any indications that the sellers were failing? Well, the larger POC is way down here. We filled that larger objective. Once we put in a bottom, the market goes screaming back up with almost no remorse for the sellers until all of a sudden it goes flying all the way back down. Well, you'd think with that kind of conviction, they'd be able to make a new low. Well, they couldn't. They failed to make a new low, and with that failure, that roll back to the upside. And this failure really would have taken a lot of shorts by surprise, even following up with a subsequent entry a little bit further along. So if we're trying to pinpoint our entries in terms of zones of interest, we could follow the exact same mentality here. Is there some type of repetitious pattern that we can use to follow along? We've got an L2 into a continuation of an L1 into a big blow-off move, nice drive into an L3. So we've got the nice dip pullback to the L3. Even if we wanted to take it from, again, a slightly narrower perspective, we could put our stops underneath this, in this case, 500 ticks swing low. And that would still allow us the potential to not only look for a 2-to-1 target that would fit for the risk reward, but also to look for that objective to the upside on the larger time frame, which after kind of wobbling around for a little while, reaching the first 2-to-1 pulled all the way back down and probably gave another sequence of entries along the way. So there's a lot of different ways that we can utilize this in terms of entries. And the beautiful thing about fractals, and one thing that sometimes you'll have been blessed by the markets enough to have, is multiple entries off the same zone. So this would be a great example of that, where the initial drive up, they grab the 2-to-1 objective to the targets, they scream all the way back to the downside. This would very likely scare the living everything out of any buyer that was in. But when it failed to go down, all of a sudden now we've got this big jump up, higher low, continuation a little bit sideways. Let's look a little closer inside of there. When the market starts going a bit sideways, we get a POC that begins to build up right in the middle. When the market breaks finally back above that high again, they left behind a POC where? Right back over here. Where did the market dive back down to? Right there. That's another opportunity for bulls to re-up once again back into the move. So let's take a look at it from there. Let's say late entry, way late entry, way up here. You still have your stops, which would be potentially underneath the lows. That was the scalper's objective that was filled, and then they'd be looking for a 2-to-1 follow-through, which happened quite a bit later, way over here. And once again, you can see all of the responsiveness once the market came into that zone. So fractal timeframes really allow you these areas of interest to not only focus in on what you're trying to do on faster timeframes. If you're a faster timeframe trader like myself, sometimes it's really easy to get caught up in the action. And knowing where you are on a larger timeframe like a 15-minute chart, if I know that I'm in a major L1 zone of support that I'm expecting the bulls to defend, then in the back of my mind, I'm going to ease off the gas pedal a little bit if I'm trying to go short. And I'm going to hit the gas pedal a little bit more if I'm trying to go long, because we're building that natural bias. The wind is in our sails here. It makes more sense to look for failure patterns here rather than somewhere else. Now, if we continue going a little bit further forward to some of the other ones, let's see what happened along the way. Because these were incredible failures. So here we had this initial dive down, and you can see this is the beautiful thing about the faster time frame. You can see the responsiveness here is incredible. They still have a beautiful bounce. It did end up failing back down, but I mean, realistically, that was almost a 30-point bounce. It's hard to be disappointed with that. If they continue a little bit further down, looking at any type of movement, any higher highs, any higher lows, there's just nothing here, which ended up being incredibly beneficial because that would have kept you out of a losing trade. Now, this one down here starts getting a little bit interesting. We see a very obvious bottom, another test, another test. Well, let's be realistic here. From this perspective, I think it's pretty fair to assume that some buyers may give that a shot. Now, we can consider it a failure if it doesn't reach at least a scalper's objective, so let's see what they were able to get. They were able to get the scalper's objective. So if scalpers took that long and tried to go for at least a 0.5-to-1, they were able to succeed in that move. That was it. Swing traders, they would have been stopped out on the trade. But you could definitely argue longs possibly going in here, and if you were looking for more than a 0.5-to-1, you didn't get it. And it fell back to the downside. See, even fractal timeframes aren't going to save you from losses. You got to remember, that's part of the game. It comes with the territory. Accept that fact and realize that they're just stepping stones towards the next win. Now, as they break down and we see another breakthrough, they continue a little bit further down and then it just gets annihilated the rest of the way. So a beautiful example of how fractal timeframes can both get you into some really solid trades multiple times and how they can keep you out of bad trades. And how sometimes it's just not going to matter what you do. You're going to take the L. It's just the markets, right? Welcome to life. Hopefully you found this one useful, interesting, and entertaining, and maybe something you can add to your tool belt, or at least a consideration when you're heading into your next trade. As always, if you have any questions, drop those in the comments below, or if you need a more detailed response, you can always shoot me an email, jhb@ssftg.com. Don't forget, we are on our road to the 2,000 subscriber mark. The next giveaway is right around the corner at the subscriber mark of 1975. We don't have too many more to go, so tell everyone, subscribe up. Let's get to that next giveaway, and we can get this thing rocking and rolling. Have a great rest of your day, and we'll see you all in the next video. Thanks.